What's up, guys? It's Sunday, November 5th. Remember, the 5th of November. Wanted to make a quick video of my thoughts on the stock market and what's going to happen. Last week, let me go back one more. The end of the week before last, on this day here, I said, hey guys, my alarm is going off. I set up this alarm a long time ago. Over here we could see where it was resistance and support and resistance, and so we chopped again here for a few weeks and then had a huge move up. And so I put this alarm here, and the alarm, it said buy SPY no matter what. And so sure enough, we had a huge sell-off into that line, and we had an amazing rip. I sold way too early on that, but that's amazing. And if you want to see kind of where I get my lines from, usually the 4-hour chart is what I use, and you want to see basically what number does the stock always get bought up when it gets underneath, right? And you can look more in detail for some certain trends, like this candle right here was a large buy. This candle right here was a large buy. So you can put your line there. Same thing here. They came back into this line and reversed, right? And you're going to hear my fan kick on. Sorry about that. I need to buy a new Mac. But anyway, I'll try to talk over it. So I had this line on here. I said buy SPY no matter what, and we had an amazing rip, like just no pullbacks, anything. So where are we going to go from here? I'm kind of thinking this 44.60 area, which would be SPY 444. It would make sense if they've already gotten here to just go ahead and squeeze and put in a higher high. Just knock out this area and fake everybody out that's trying to short here. All these shorters here are going to get squeezed out, and it's going to make one last push. So keep an eye on that. SPY is where I keep all my normal lines. As you can see, my chart is just only lines, right? So we're looking for, we got almost up to this line here, 436 area before we reversed. The major resistance was actually at 437.60 area. That's where the major seller came in. So we can expect them to get there to 437.60 at least. If they get up there, excuse me, if they get up there, don't be surprised if they shoot over it. Because what happened was they came up short of it at this point, which is a sign that if they come short of a number, like if they come up to a number and then don't pierce it and then get rejected, if they come up short, it's usually a sign that they're going to attempt to break it. So they're going to build energy down here and then break it. So don't be surprised if we shoot above 437.60, but that's when we need to start paying attention to other things. We have this breakdown area right here as basically 444. I've been saying over and over in the group, the theme for these last few years has been numbers ending in 4. So we had like, we never got down to 404, but we had 414, 424, 434, and I wouldn't be surprised if 444 was their final destination. So keep an eye on that. Don't try to fight the trend yet, because what's going to happen is we'll probably see another move like this of just a few days of junk. I kind of doubt we're just going to have a straight up crash. It's always possible, but I doubt it, because it's just, I don't know, it's just not really how things work. Usually they're going to chop around, have some fake outs, and then finally give it up And you're going to have all this buying power, all this buying pressure, all these people who wanted to buy the dip going to keep trying to buy. Now, in my theory, my grand overall theory, I need to, let me go back to ES because my chart's cleaner here. This isn't exactly a double top necessarily. Like, I mean, you could argue that it is, but really, it's still a pretty bearish pattern. Let's start here. Market crash chart, textbook pattern. So, burn this image into your mind. If I can find it here. Here it is. This chart here, let's open it up in a new window. This chart is basically, this has been a textbook move. You could argue that this was the beginning of the Trump administration, the COVID crash, which is the bear trap, and it was a heck of a bear trap because we had a huge squeeze, right? Huge squeeze. We had 2022, we had 2023, and now we'll have 2024. That is my opinion, obviously. But I want you to compare these charts and, tell me what your thoughts are. But, and actually, the NASDAQ is a better example, really. But we had, I don't know how to get, here it is. Okay. From what I can tell, this looks a lot like this. Wish I could make that smaller. See if you can see what I'm talking about here. Right? So we had our bear trap, we had the bear trap, our enormous rip, our failure, and then retest, the return to normal, stocks only go up, the bear market's over, and then we have our crash. Now, we're at an opportunity to find news to justify this if we end up going to war. That seems pretty possible. We also have news that inflation is rising again, and that's going to cause issues. So the thing is to always know is they are always going to find a reason to justify why the stock market moves, but in the end, it's just textbook patterns. Technical analysis is the only thing that matters, in my opinion. So, in a normal stock, you have support and resistance, right? So this is a monthly chart of the S&P, but just imagine this as a 1 minute chart of a stock, right? If this was a 1 minute chart of a stock, you would say, okay, you were basing, you broke out, you came back and retested. That's probably a 60% retracement, I would guess. Let's see. From here to here, we had about a 50% retracement, right? So it's good for its next level or next move up, right? So we had that move up. That was another 50% probably, I'm gonna guess. Let's see from here. Um, yeah, look at that major move, 1 to 1. I mean, you can't make this stuff up, guys. Right? We had from 0 to 1, 50% retrace. I didn't change this thing. You understand that? Like, I didn't change anything. That to that is the same size move as that to that. Like, you can't make that up. So don't pay attention to anything in the world. Just only pay attention to charts. So now, watch this. We've had a 50% retrace. We came back up. We came up short of 100% retracement. We came up to about a 90% retrace, right? Now we're pulling back to the 7-8. But if you were trading this as a 1 minute chart, would you be buying this right here? I'm not. You have 90% down here and 10% up here with the hopes that we have another, let's see, our move would be about like this. So the expected move would be about like this. So for the, S&P would be like 6,000, right? So you go from 4,600 to 6,000. Or would you want to retest some levels down here first? And I would probably retest around down here somewhere. If this was a 1 minute chart. If this was a 1 minute chart, I'm looking for move up, retest, move up, retest. Oh, we got a double top. We better come back down and shake some sellers out before our next move up, right? This is a monthly chart, so that could take 4 years to do this. But I just wanted to give my opinion on that. Also, so short term, because we're not trading on monthly charts, we're trading on day charts. So let's look at this real quick. You want to see where the buyers and where the sellers are, right? So let's do this together. I already did the buying part, but let me just do this. So we had a buyer from here. Buyer stepped in here and saved the market, ran it all the way up to here. Basically, there were some pullbacks, right? And you had the same thing here. You had a buyer step up. It ran all the way up to about here. Come over here. Buyer stepped up. Came all the way up to about here. You could argue up here, right? So, we kind of have this theme where there's buying from this area down here up to at least this area up here, if not a little bit higher, if not 4,600, or 4,550 would be a safe bet. Now, I'm not saying it's going to happen all at once, but we need to be aware that there is institutional buying from this area up to this area. So it would also not surprise me. I don't know where I need to learn how to use this someday. It would also not surprise me to be up here. And what worries me is the faster we get up there, the harder the fall is going to be. Because we moved here really fast, like extremely fast, right? If we continue higher and hit that within like the next week or so, we're going to have a move like this. And it might even be even worse. Because then this isn't going to hold anymore. It's tested 1, 2, 3 times, and this one had already given up. See, by the second time they gave up, right? They just happened to come back in over here. By the second time they gave up. So if they come back, if they come up here and they can't make it and they start to fall quickly, they're not going to stop here anymore. So that's where the buyers are, right? The buyers are from here to about 45.50. So keep that in mind. There is a possibility of being bullish to 45.50, despite what the news says that we're too high, because we're never too high. I learned that the hard way on GameStop. We're never too high. You can always go higher. So let's do that same thing with sellers. Here's a brush. Okay, so we had a seller here. He pushed it down to here, right? Seller here. He actually pushed it down to here. The seller here pushed it down to at least here where it bounced. You see this? Right here, this reversal candle. So let's just say it's from here to here. So that's a move there, right? We had a seller here. They moved it down to here. So you could say with confidence that this area is your selling, your institutional selling. Let's make this one red. Okay, so 45.50 again. That would probably be our target. I think I'm going to stick with that. 455 SPY. 454. Let's do 454. Quote me on that. But anyway, if we don't get there, that means it's even weaker than I thought. It might get rejected this 44.60 area, but I would expect them to break this anyway, and that would still mean we have a high, a lower high, and a lower high. Even if we came up to here, it would still be a lower high, right? Until they took that out, but I cannot imagine they're going to get above 45.50. So let's let it keep going for a little while. I'm usually never wrong. I'm just early, so it's possible that this is going to take a month or two to get up here, and but at least I'm the first one to say it, right? That's all that matters. But we can be ready for it. So keep an eye on that. And that's when I kind of expect this other pattern to unfold wherever it went. This one, right? So, of course, everybody is saying the market's just going to continue. And unfortunately, in this one, it goes even deeper than the initial bear trap, right? So keep that in mind. As far as other reasons why I think that, so I said buy VNQ, buy housing stocks. Check out how wonderful this works, though. I mean, it really works great. The whole market is so intertwined. It's so interconnected. It's truly amazing. But you have this area, let's go to the weekly chart. You have this area here where it's been support in the past. You had 1, 2, 3, 4, 5, COVID, but they saved it, 6. And so it came down into this area, my alarms went off, and I said, buy housing stocks, right? It's going to be a nice bounce. And we will probably see a pretty nice bounce from here to here, here to at least here, here to here. We got quite a bounce to there. This one came up short, but it still did get up to there. So this one, you could expect it to get all the way up to 86, right? That's why I think it might not crash yet. Might not. But the other thing you have to worry about, though, is what happens when it breaks. You've got a seller from here to here. This is the first time I'm doing this, by the way. I'm doing it with you guys. From here down to here, right? So you would expect this area, you could see a pretty substantial move, at least from 86 back to support, but then breaking the support, that opens the door for all kinds of stuff. Might as well put some numbers down here. This area here was support, and then ultimately, new lows, this kind of area down here. So if housing went from 77 to 27, that's considered a market crash. So keep your eye on that kind of stuff. If you look at stuff like Kellogg, or whatever it's called nowadays, I mean, this doesn't look good. These are Dow Jones stocks, right? Like, it's been in a great uptrend forever, but now, like, it's actually, this is a failed breakout. This would have been an excellent place to short, and it probably should go a long time short on this this stock, whatever it's called nowadays, Kellogg. A failed breakout is always stronger than the initial breakout, so that's going to be down here. Actually, let's probably go ahead and do that. In the next couple of days, start grabbing puts into the 40 area on Kellogg. Would be a good swing trade. But when you have Dow Jones companies, you know, same thing here. Oh, here, this is interesting. So we were looking at this one a while back. Coke had an inverse head and shoulders, and we were expecting a breakout, and it failed. So I mean, it's lower than it was in the COVID drop. Coca-Cola is right now. The only things that are going through the roof right now are tech stocks. You know, Nvidia. I don't know what is going on with Nvidia. This is absolutely nuts. But you know, and what's real bummer is we were in 230 calls last week, and it closed at my number. Look at this. Look at this. Look where it closed. I mean, you can't make this stuff up, guys. The numbers work. I just don't have the patience to wait for them. But they do always work. So, you know, look at Nvidia. Anytime it gets over this area, look for shorts. Look for short entries, right? So if you get any pops up here, let's say right here, all this junk right here, there's a seller sitting here. 468. That's a big gap, 451 to 468. But if we're at 468, short Nvidia. What worried me was how fast we moved on the Dow Jones. I mean, on the SPY. It's not sustainable, this kind of move. And usually what this kind of move is followed by, let's just look left and see if there's any moves similar to this. I haven't done this yet either. But let's see if there's, well, look at this. We had 1, 2, 3, 4 huge days into this 44.60 area. So we haven't even got that far yet. We're still right here. So we can still move up to here, right? Had this huge move, and then what was it followed by? 100% return in the opposite direction, right? And it was choppy and messy and hard to trade, just like this one is going to be. You have quick squeezes back up, like this one. Quick squeeze back up, 3 days, and then jump for a long time, right? If you wanted to short shares, you could. If you want to short with puts, you're not going to have a good time. But you know, until you get towards the end, and then they have the final sell-off. So, you know, look for this move all the way up here. It's not impossible. 44. I wouldn't be surprised if we were there by like Tuesday, right? So don't get bearish yet. Don't try to chase the call the top yet. Let the numbers work. I'll go ahead and put a line here at 45.55. That will be our official short entry. Look for a couple pullback days for a place to buy in if you want. But yeah, just be warned. This is not a healthy chart. This is a worse chart than this was, because, in my opinion, we did hold this breakout area and bounce. But if we give this part up, then major sell-off could happen. That's all I really got. I hope what I contribute to the group is worth your time. Feel free to send me questions, and I like talking about this stuff. So if you see anything, I was going to talk about oil too. So oil, this is a pretty cool little move. But now you can see the chart differently. That's not oil. I got to get on the right chart. There we go. Okay, so check out oil here. Oil, I think, is let's go to USO. USO is easier to see it. So USO has still got some room to move up, and that's why I've been bullish on this. But so check this out. If you zoom out, you see we had a buyer from this area to this area, from this area to this area, and even up to here, you could argue. So you could say, to be safe, you could say from here to here, probably here to 90. There's a buyer from 60 to 90, right? So now we've had, look what we've had. We had our consolidation at 60, our move up, pull back, double bottom, and then our final push to 90. So I still like oil stocks. I like that this kind of broke down, chopped for a while, and then came up. And it's possible that we don't stop at 90. But watch oil stocks for long opportunities. Our next resistance, I have a line at this 118 area on USO. So keep an eye on that. I still do like that. If I'm wrong and we take out this bottom, 73.50 area on USO, that would be your stop loss. 73.50, you'd have to wait for a pullback and hope it happened. And if it broke there, we're also dangerously close to giving it up again. You lose this area here where this gap was. If we break down below this, you could see another major sell-off in oil too. But I kind of expect oil to bounce, and it's probably full of shorts, I would assume. Because the USO is kind of a, what do they call that? I don't know, but it constantly goes down. Whatever they call that one. Like a bear inverse type stock. But watch USO, because we had this nice bounce right off this line. Oh, and look at this. Look at this. They might even be making a larger run than 90. Because look at this here. From here to here. You see this? So let's say from here to 110, at least, to be safe. So we've got our double bottom here to 110. That's going to be our target. And our stop is 73.50. Like, you can't get in a better position than this. You have a dollar stop loss and a 70, 80, 90, 10, 20, 30, $40 move on a dollar stop loss. You can't get any better than that. Long oil stocks, XOM. I like XOM because, so we had this number at 102, and we were talking about this in the group. Every drop below 102, they buy it up, right? So what would happen if they bounce early? If they didn't pull back to here and the institutional buyers bought, what if they bounced early? Two things could happen. One, they take out this area and then they're not going to bounce here. They're going to come down, they're going to fall. Or they do bounce on this double bottom and make all of these 102 people buy at 108 because they missed their chance to get in. And it's going to shoot the market up, right? You've got kind of a, let's see if there's any patterns here. Kind of have like a expanding wedge type deal. Well, it's not really expanding wedge, it's just a channel. I guess you could call it a channel type thing. So very quickly, if these 102 buyers decide they're leaving without me and they jump in at 110, which we're in 110 calls, right? and you can get in 110 calls tomorrow because your target is going to be this line, 120 area. So a 100% return. And your stop, if you want to make your stop 105, you can, 104. But that's extremely low risk, high reward. You could at least say it's right here, 120. So if you want to get in on some kind of pullback, I think Friday was our pullback. I think we're going to gap up on Monday, probably around 110. But get in 110 calls and ride it to 120. Get 3 weeks out or 4 weeks. Get December. Get December if you want, and ride that. Just ride that move, because oil's not necessarily going to move with the market. Look at this. You had prior peak, came down, retested it, and that came support. So XOM, super bullish on right now. And what happens if they? This is theoretical, but what happens if they break above it and then bounce, and they can start moving climactically? Right? They don't have to stay in this channel. So anyway, keep an eye on XOM. Keep an eye on NVIDIA short. Keep an eye on Meta short. Look at Meta here. This is a monthly chart. Remember this? Earnings, the first earnings they had, they lost like a huge percent. Huge. And so I put a note on here if we ever got back up here to look for short opportunities. Because all these people that lost their money and lost their huge parts of investment, they want to get out. They don't want to see if it'll go higher. They want to get out of Meta and they want to move on, because they know if Meta can sell off this hard, they don't want to be in this stock anymore. I wouldn't. First chance I got that it came back to where I should have got out, I'm going to get out. So watch Meta. Look how this works. This is a monthly chart. Nobody pays attention to monthly charts. This monthly chart breakdown candle right here, I put a line at 134.56. That was the open. Look, open 134.56. Look how this makes moves. Every time it gets above 134.56, what happens? It sells off. Right? They're trying to creep up above it, but I'd say go for it, man. Every time it gets above it, it tries to sell off. Every single time. So now this one was kind of just riding the wave, but still. Anything above 314, you can short Meta if you get long enough out, because it's gonna pay. So short Meta, short NVIDIA. I think I said 368 on NVIDIA. 468? I don't remember. Pay attention to those. Anyway, let me know if you guys got questions. Thanks.